Hi everybody, this is Dan Sheridan. Welcome. Today is Wednesday, October 21st. SPX is not doing a whole lot today. I think we're going to be pretty range bound as we go into the election. Probably with SPX around 3,400, 3,500. The stimulus could give a boost up maybe to 3,500, a little bit more. But I don't see us going too far north or south before the election. I just want to show you this. We have here's the front page of Sheridan Mentoring. And then I'm going to go over a trade idea for today. If you look here, managing short-term trades after the election, the new class. Once I click on that, and you can see the next online class Mark Fenton and myself will be teaching. Will be starting this coming Tuesday, the 20th. It'll be a 4-week class, managing short-term trades after the election. We kind of have a bonus the next week. We're going to start Tuesday. That'll be 1 week before the election, the following Tuesday. So we'll be talking about opportunities going through the election. And then after the election, when things get back to normal, we'll be trading some back to doing some short-term trades and trading that with you. And then following that, our last class of the year will be making a trading plan, right? Making a trading plan for 2021 and trading it for 3 weeks. And so we're giving you a 20% discount. It'd be $555 for both of them. One's a 4-week class that meets twice a week. One's a 3-week class that meets twice a week. A lot of material, but I think that'll be a big help with you finishing the quarter strong, the year, and then starting the next year right. And we're actually going to trade the trading plan with you. So that's a little bit about what's going on. As far as today, I've been looking at, again, I think we're going to be range bound, so I'm looking at a iron condor. And again, I don't want to really trade a expiration after the election right now, too speculative. So I'd be looking like, the farthest I'd go out would be like OCC 39 days or NOV 2, which is 12 days. So if I go OCC 30, which is 9 days, in this particular, I'm going to do something we call an equidistant iron condor. If I go to OCC 30, I'm going to sell a call with a delta of around 16, and on the put side, a delta of 22. That will get me a little more delta neutral in this range-bound trade. So I'm going to be selling the 35.65 calls, and I'm going to buy the 35.75 calls as my hedge. On the put side, I'm going to go to about a 22 delta, and with a 22 delta, I'm going to sell the 33.55 puts, okay? And then against it, I'm going to buy the 33.45 puts. And you can see this trade. Here we go. With the underlying basically at 34.54. It's going for around a $3.30 credit. Your margin, because these are 10 wide credit spreads, is going to be $670 for one. And so I'm looking to make about 10% on this trade. 10% of 670 would be about 65 bucks. So if this 330 credit goes down to $2.65 debit, I'd buy it back, and to make my 10%. If I'm down 15%, I would get out. 15% of 670 would be about $100 bucks. So if this 330 credit gets 430 or higher, I'd take it out, take it off for my max loss. So that would be a kind of a plan for our equidistant iron condor. We'll talk more about risk management of that type of a trade, because this would be a short-term trade. This would be about 10 days out in our class that starts next Tuesday. Hope to see you there. Have a great day. Thanks. This is Dan Sheridan from Sheridan Mentoring.